Welcome back. Good morning, good afternoon, good evening, depending on where you're logging in from this morning. My name is Joseph James. Welcome back to our live morning prep. This morning, we're looking at crude oil futures. We're going from the screen to the floor. I'm here in Los Angeles. My name is Joseph James. I'm from schooloftrade.com. I'm a lonely old day trader with my computer screens and my technical analysis coming to you live from Los Angeles, California. I run a live trade room every morning at 8 a.m. Eastern Time with our members. Come out and join me anytime at School of Trade. I'm going to provide you with a technical approach this morning. I'm looking at technicals. I've got my computer all warmed up. I'm looking at charts. I'm going to be taking a top-down approach this morning, starting with dailies and weekly charts, and I'm going to be drilling down all the way to analyze the overnight trading session. And ultimately, my goal this morning is to anticipate direction at the open. I can't obviously guarantee anything. I can't predict, but I am going to be looking for the direction at the open, right? What is likely to be the highest percentage direction, and then we're gonna pinpoint some high percentage trading opportunities. So some specific price levels that I will be looking to take trades with today. We never know what to expect. We can't read the future, right? We can't see the future. So all we can do is anticipate the direction. That's going to give us the odds in our favor, and then we find the exact price levels, and those are the high percentage opportunities that will most likely here be showing up anytime, really, but I'll be looking at them around 8 o'clock Eastern Time. So by the time we're done this call today, you should be ready for battle here this morning, knowing the direction and knowing the key turning points in the market that we want to be using for trading opportunities. Now, once I'm done with you, I'm going to toss you all the way across the country from Los Angeles all the way to New York City, and I've got Marty Errico wired on the floor of the NYMEX exchange. That's right. This is a very unique morning prep. This is a very unique way of looking at things. Not only are we one of the only folks that give you a morning prep every morning, but we go from the screen all the way to the trading floor. I'll tell you, Marty Errico is going to give us some incredibly unique and I think very important pit analysis, and that is looking at market direction, right? Intermarket divergences, looking at crude oil, RBOB, heating oil, Brent crude. We're looking at market internals. Look at some option prices, and always very important, we'll finish up with the pit session levels this morning. Remember, if you're looking at just screens this morning, you're seeing a little bit different information than they're getting on the floor of the NYMEX. We'll take a look at that. Alrighty, you've heard enough from me so far. Let's jump into some charts right now. And the first thing I'm going to do is we're going to start out with a quick reminder here that we do have a contract rollover alert. Right? I guess that would be a good way to describe it. If you head over to your market analyzer or NinjaTrader or whatever charting platform you're using, we zoom on in here and we can see now we have the crude oil 813 contract that has overcome volume of the 713 contract. Guys, we've been watching that for the past few days. If you recall, Marty gave you a heads up last week that the trading floor was rolling over. Okay, well now we've got signals on our charts now that it's time to get rolled over to that 813 contract. If you head to our blog right now, sidewaysmarkets.com, you can find a link there by using the search term contract rollover, and you can figure out, you can learn all about how to properly roll over your futures contracts. Now this morning I've rolled over my dailies, my weeklies, my hourlies, all the way down to my tick charts this morning, and here's what we see on a daily chart. Really important, remember kiddos, the daily chart, this is only used to tell a story. The daily chart is not being used to take trades with. Now, if I was a swing trader, a longer-term trader, absolutely I could use this chart to take trades with. But in this case, we're intraday traders, which means this is used just to set the story. This tells us what's been happening the past few weeks. There are a couple big clues here on this daily chart. First things first, we can easily see this bullish tone has kept on pushing. If you recall, we had talked about this middle of the week last week. We knew that if we closed above a specific price level, right, that was at 97.66, 97.77, we knew that we were in store for bullish prices. We know that we have 99.66, and we know that we have 100 big round number overhead. These are two huge clues. We can easily expect that big round number of 100 to be very sticky, right, which means it's going to act like a price magnet. It's a psychological level. Everybody's focused on it. In my humble opinion, I believe that once we get above 95, then just the simple ability to see the 100 is enough to drag these prices higher. Once we get below the 75, then you can see the 80 level, and we tend to hit 80, right? It's that psychological aspect. Everybody remembers the high of day from yesterday. Everybody remembers that day we hit 100. Everybody remembers these big, important numbers. And guys, it's that self-fulfilling prophecy, right? There's a reason why they tell you to keep your eye on the ball in baseball, right? There's a reason why when you shoot a basketball, they tell you to keep your eye on the rim. It's because where your eyes are focused, things tend to go. Well, it's amazing how the financial markets, you can bet, everybody's talking about, hey, the 100's coming up. Hey, did you see the 100 over here? Yeah, when are we going to go to 100? Did we go to 100? Are we going to go to 100? Right? Everybody's talking about it. You're going to hear me say it a bunch of times today. I'm sure Marty will hear it a bunch of times on the floor today. Everybody's talking about it. And again, just like putting your bat to the baseball, keep your eye on the prize, and you will get the prize. That 100 is in our radar. It's on our radar. Another clue we see here, I've got some symmetry. If you go A to B, B pull back to C, yeah, that's a symmetry sweet spot for us here in the live trade room. We know we've got some symmetry resistance now overhead at that 102.64. So 102.64 to 103.50, unfortunately, I'm sorry for all the soccer moms out there and for all those business owners that rely on crude oil and are consumers of crude oil. I hate to break this to you guys, but if we keep going above 100, we're destined to hit that 102, 102.60, 103.50. It could be a summer of higher gas prices here if these buyers continue on the road that they're headed right now. In the last 2 weeks, we've seen bullish consumer confidence, bullish manufacturing indexes, bullish consumer prices. This is inevitable, right? The only thing standing in our way right now is this sell zone right here. This sell zone, this could be one of the most important things out there. So guys, if you've been waiting for that time to gas up the boat, gas up the motorhome, now might be the time to do it, because the next few days here we may see a little tick up here to that 100 level. All right, there's your daily chart. I'm not done with you guys yet. Let's run over here to a 4-hour chart. The 4-hour chart shows us so much more information. The daily chart tells us, yeah, we got rising prices. The daily chart is very good at giving me some important clues. What do we see on this one, though? First of all, there's 3 clues that I see on this chart. First one is big bull channel. The big bull channel tells me, Joe, you've got to keep buying these pullbacks. You've got to keep buying at support if price dips. You've got to keep buying the dips, right, as they say. So we know the bull channel tells us we've got direction. We know what direction is the highest percentage. And as a professional trader or as a retail trader, as a rookie trader, we know that it's up to us now to be patient, to wait for the buying opportunities. If you took my advice yesterday morning, my guidance yesterday said short-term selling, long-term buying, and we got exactly that. We got 3 to 5 short-term scalps to the downside yesterday morning, but the big trades were buying those pullbacks on the way up. This is going to be a very similar situation. Bullish channel, first clue, buy pullbacks, buy at support. So what I'm going to look for is, as price falls lower, 98.19, I'm buying the trend line. As price falls lower, 96.90. As price falls lower, 95.55. And the sweet spot here this morning at 95.35, 94.43. By far the sweet spot this morning. Now, I highly doubt we're going to get all the way down to 95.35. But if we end up there later on this week, don't say I told you so. That's going to be a tremendous buying opportunity, because not only will we be buying inside of a trigger zone, inside of a buy zone, we'll be buying at the lows of a bull channel. It does not get much better than that. So as price moves lower, I'm looking for W patterns at levels of support. I'm looking for what we call a 2-step pattern in our live trade room. Looking for a 2-step pattern at support levels below us. And we can see there are many support levels, and I'll post this chart right on the blog for you. Now, if we don't get a pullback, which it does look like we are going to get a little bit of a pullback here, depending on how far that goes, if price just jumps, what is the third clue? The first clue was buy pullbacks. Second clue was easy levels to buy at. What's the third clue we see? Third clue, wide open spaces, right? Always reminds me of an old country song that I've never heard before, right? The old wide open spaces on crude oil, right? Maybe we should write one, Marty. Think about the words to that country song. We'll write one up here. Maybe we'll be a smash hit in the floor. I'm kidding around with you. We got 99.51. We've got 140. As you can see, I've got plenty of room to jump to 99.51. And then if I can get above that 99.75, we got 100, we got 140 waiting for us, guys. As I said, we're not seeing many signs of this stopping right now. This wide open space overhead. Remember this chart looked like yesterday? Anybody remember yesterday? Remember yesterday we had those big sell zones? Remember how yesterday we had those big sell zones that were piled up here, and we said, oh boy, we got to get through those. We got through them. Now that we've broken through those sell zones that were there, now they're automatically removed from my screen. And of course, I'm reminded that we've got a wide open space. We've got plenty of room for price to jump up to 99.51, and then we're halfway home to 100 even. So don't be surprised if this price jumps. And if it jumps, I'm buying pullbacks. If it jumps, I'm using 99.51 as a profit target. Short-term selling opportunities at 99.51. Long-term buying opportunities up to 100 and 140. Looking good. Looking good. Let's keep going. I've got a few more here for you guys this morning. Let's head over to a 60-minute chart here first. First things first, a good old 60-minute chart. And the 60-minute chart, really, I probably could have skipped this chart here today, but it does show us some important information. Yeah, Joe, we still see the same bull channel. Yeah, Joe, we know buying pullbacks. Yeah, Joe, we see it. We see the wide open space. Yeah, a lot of the same stuff, right? A lot of the same stuff. We see the wide open spaces. We see the bullish channel. We see buying opportunities below us. But there's something very important about this one, and that is now we begin to fill in the blanks. 98.41. If you remember off the 4-hour chart, we had to wait all the way down to, what, 95.50, right? We don't need to wait that long in the 60-minute. On this chart here, now we see 98.41 and 97.94. These are key levels of support below me. These will be where, and this is where those retail traders out there, this is where all the new traders out there, if you've been trading less than 6 months, it's so important that we identify where's the high percentage trade. The high percentage trades this morning are going to be down at 98.41 and 97.94. What does that mean, Joe? That means that my ability to stay patient and understanding that selling short right now may yield short-term results. But if I'm a new trader, by selling short at this time, I may take a loss, and unfortunately that loss may kill my confidence, it may kill my trade account, it may put me out of the game before I get a chance to take that knockout blow. Remember, learning to trade is like learning to be a boxer. I can jump into the ring and survive and learn and eventually pick up on my opponent's tells and then take you out in the 8th round. Or I can go in swinging for the fences and get my head knocked off, right? I can get knocked out in the 1st round because I don't know any better. Or I can be patient. I can wait for those ripe opportunities. I can learn a little bit about my opponent. I can tire my opponent out. And then when I see it time, I can go in for the kill. That's what it means to be a professional trader. Yeah, I can sell right now, but is it in my best interest? If I sold this 100 times, would I see more winners or losses? Because it doesn't matter what happens one trade at a time, right? It's called the coin flip theory, right? It's called the coin flip theory. The coin flip theory says if I flip a coin once, there's no odds of getting heads or tails. If I flip that coin 100 times, now that coin, right, there's a 50% odds it's going to be heads. What does that mean? That means I cannot predict my success one trade to the next. But if I take 100 of those same trades, I can then predict the odds of my success within a very, very small margin. So this tells me that being a bullish channel, I am foolish to expect the selling opportunities to be the most profitable or the most consistent. I'm going to wait patiently now for price to give me opportunities to buy. So I find levels below me, 98.74, 98.41, 98.05, 97.94. What that tells me is the conservative traders out there wait for 98.41 and wait for 97.94. All right? If you want to play with fire a little bit more, if you want to take a few more trades today, buy the 98.74 right now, buy the 98.05. So I'm telling you right now, guys, if you want to take only the most powerful trades today, you're buying the trend lines, you're buying the 98.41s, you're buying the 97.94s. If you want to take a few more trades this morning, you're buying 98.74, you're buying the trend line, you're buying you're buying 98.41. Again, you can see all the levels below. So you can either be selective, looking for only the home run trades, or you can be a little more aggressive. Just be aware, though, by taking more trades, you've got to manage that risk properly. Keep that risk small. Keep that reward large, and you'll be just fine. As long as you've got the direction right, you literally, as long as you follow the plan, good risk-reward ratio, using the highest percentage opportunities, you're going to be just fine out there. All right, that's my 60-minute. Let's wrap it up before we head over to Marty. I've got my 60-minute chart telling us buy pullbacks. 60-minute chart gives us easy spots above us to get long, or excuse me, spots below us to get long. Now let's look at the VIP chart. And the VIP chart is extremely useful this morning. Now you'll notice the VIP chart is a simple 5-minute chart. Joe, what's so important about this chart? Why do you call it the VIP chart? Because these are the very important price levels. The very important price levels. Now, we talked about on that 60-minute chart, we've got 98.74, right? That 98.74, that was the level off the 60-minute chart that we just talked about. 98.74 also lines up here perfectly with the bottom of the reversal zone. Guys, this is exactly what I like to see. I like to see here, if we know we're looking long this morning, this is like taking candy from babies. We go into the reversal zone, which, by the way, I would not recommend, by the way. Leave the kids alone, okay? Let them eat their candy. What I would do is I would buy that reversal zone. Either I'm buying with a W pattern, right? Buying the lows, two-step. Members, you know what I'm talking about. Or wait for price to go higher and then buy that pullback. Simple. Simple, simple, simple stuff. Okay, so we know we're buying right now. We have a buying opportunity. I have levels below me here. And again, I'll be looking for two-step patterns, W patterns. I'll be looking for a bounce off 98.61 followed by a pullback entry to get in long. I'm looking to buy the 98.74, buy the 61, 98.47. I've got a major hot spot here at 98.42, 98.23. If you recall yesterday, the exact opposite was a great reversal zone for us to the downside. This morning, we have the previous close at 98.11. Be aware, the previous opens, the previous week closes, they tend to be a sideways, chop, kind of sloppy area there. Be patient through it. I will always use the previous week's close, the previous week's open. I will always use that as a profit target. I will not use the previous week's closes or opens as support or resistance. Okay, I repeat, the previous week's open, the previous week's close are used as profit targets, as price magnets, but I do not use them as entry locations. I don't use them as places for entries. Why? Because when we get down to that area, we tend to get stuck. And so what I'm going to do is I'm going to wait for price to then begin to move higher, and then I'll look for the entry, or move lower, and then I'll look for the entry. But be careful when you slop around those previous week's closes or opens. And, of course, we see below us here 97.97. That's going to be another buy zone below you. As you can see, I've marked up plenty of areas below us to look for some opportunities to take trades here. I think I may have missed a, nope, we're good to go there. There might be a little bit of a trend line drawn here for some support, but yep, so there you go. So I missed a trend line there. That obviously will lend to the credibility of this reversal zone. Looking above us here, guys, if you're following along at home here, if we do go higher this morning, I do have levels above me here at 99.21. Okay, if we do go higher this morning, I've got 99.21, 99.31, 99.44, 58s, and we got 81s all the way up top. As always, I'm going to use that reversal zone the exact same way to the upside. I'm going to sell it. Of course, we know to expect those short-term sells, long-term buys here as we go higher. All right, guys, those are the levels I'm looking at this morning. As you can see, we may jump up here right now. We may not. It doesn't really matter to me. All you got to do is stay patient. I'm not trying to predict. Who cares if this price goes lower? I'll wait for price to test the next level of support. I'll look for the reversal, and I'll take it there too, right? It's easy pickings here when you know what the direction looks like. Guys, don't forget, this is a wacky Wednesday. This is the Wednesday of OPEX. Before I let you guys go, we got some red flags on the calendar today. Today is OPEX Wednesday. Friday's OPEX. Friday's quad witching. This is the wackiest of all wacky Wednesdays. On top of that, we have crude oil rollover. We've got inventory data out today. Woo! If that doesn't get you going, right? That's a lot. Those are 3 big red flags. Okay, we got contract rollover, we got Wednesday of OPEX, and we got the old crude oil inventories. That tells me it is paramount that we take our time, follow the plan, trade in the direction of the high percentage trades, and look to always manage that risk. Guys, that's it for me here. I'm going to toss this over now to Marty Errico. Marty, am I off my rocker this morning over here? What are you seeing on this wacky Wednesday on the trading floor? Good morning to you. Great to have you here with us. Welcome back.
Alrighty, JJ. Good morning to you guys. All right, so across the board right now, we have seen just a little bit of a tick higher in prices. If you look with me, you look at Brent. We'll look at the multiple market divergence first this morning, and we'll kind of get a key of where we're at. So on crude, as you can see, we have these. Let me just get my screen up. We have these 98.80s that we were just trading near. You know, maybe now 50s right now. We were at 80s towards the beginning of the broadcast, but now you can see we're towards these 80s at the moment, and I mean towards these halves right now, and 98.5 is a very important level that I want to see it open above, or even an open at. I mean, at the end of the day, we still see somewhat of a bullish market. The inventories last night, let's get to those API numbers from last night. So APIs, they hit the board late last night, well not late last night, but after closing bell, and we saw a huge draw in crude, substantial as well, 4.3 million barrels. So we see a draw, negative 4.3 million in crude. The most important, Cushing, Oklahoma, the numbers that we get today, we're going to be looking at the Cushing numbers. They're going to be the most important. Cushing shows a draw of 774,000 barrels. We saw gasoline show a build of 919,000 barrels, so just short of that million level. And distillate, they showed a draw of about 607,000 barrels. So across the board, somewhat of a draw-like report. Draw in the commercial crude, draw in the outright crude, draw in the Cushing numbers as well, which is quite important to see. We want to definitely keep our eyes on those Cushing numbers all the time because it's very, very, very important to watch those Cushing figures. A lot of traders are watching them themselves, and they think that it's a very important level and number to watch. So I'm going to continue to keep on watching those Cushing numbers. As I mentioned, we have crude and products trading bit higher off the overnight session. We made it up to 99 even in the overnight, and then we ended up fading off that high. So this is just, I think, a nice pullback before the open. So we're going to keep an eye on this opening bell this morning, of course, 98.50. This morning, the volatility, as we look at the August contract now, volatility has just come in a bit, trading at around 20%. That's about, normal for us at least. Do we continue to see us above 20%? Yeah, because right now we formed a new value area, and now we want to see that 18 to 19% in volatility. If we can get to 18, 19% in volatility, we're only at 20 right now, we could see a significant tick really quickly as well, up to $100. So we're going to be watching for vols to come in just a bit. The OVX, first day now, goes and settles below 21 now. It's at 2064. Yeah, 2064, the OVX. That's the cash volatility index. That's basically available anywhere. You can just, it's a ticker symbol OVX. So as I mentioned, implied for the crude's 20%. Let's just talk now also about our risk-on, risk-off sentiment. Today we see the dollar showing us somewhat of a risk-on sentiment. If we can continue to watch this dollar fall ahead of the Fed, now we're probably not going to see too much activity out of the dollar index right now because of the Fed. So eventually I think that we're just going to chop around on the dollar and then eventually kind of pop out after Fed. Now, does the true reaction come into play at 2 o'clock or 2:30? There could be some type of reaction at 2 o'clock, but 2:30 is going to be the press conference, so that's going to be key. We want to see what happens. Of course, whatever happens with the Fed will probably move crude as well, as we're going to be focusing on inventory numbers today, and we got our leading indication, all right? We got our heads up already, and the heads up was the API numbers that I just told you. So we'll go over forecasts in a minute for crude. So most importantly, the Fed will move the dollar and it will move crude bottom line. We wanted to see what kind of language and what their plan is to taper instead of just saying, oh, we're going to start taking money off the table. We want to try to hear a plan. So if we can hear a plan and get in our minds how they're going to taper this out and how they're going to, end quantitative easing in their bond purchasing program, that will be help to us. All right, so we covered volatility. Let's look at the spreads here this morning now. We look at the Brent WTI spread and the trade 735. We're going to be looking at that Augie to Augie Brent WTI spread, and it's about 735 at the moment. Kind of tightening up just a bit this morning, and we're in contango by about 10 ticks. But as we proceeded on throughout the morning, we started to see that spread just show us a little bit of backwardation. So we're actually in backwardation now, which is meaning that crude is going to trade lower. So as those spreads go up higher, crude will trade lower. As it tightens up and comes in contango, the market will rise. So we saw the spreads in contango, right, in the overnight session as we traded a little bit higher because of the fact of the inventory numbers, the draw of 4.3 million and the draw and Cushing of 674,000. We also want to keep an eye on the calendar spreads as well. So right now, as I mentioned, that spread was very tight in the morning and then started widening out as we faded off those highs of 99. But overall, the spread is still looking bullish to me. All right, the calendar spreads this morning here. We're going to be looking at a little bit of a different calendar spread. We'll still look at some Julys, but we're mainly going to be focusing now on Augie to SEP, Augie to OC, and Augie to Novi. Okay, so we have the August contract right now. July to Augie is about 21 cents as its first. It's going to be soon expiration for your July. So July to Augie trades about 20 cents, which is tight. We also look at your August to SEP now. August to SEP is telling us a little bit of a mid-range trade at the moment, and so inventory numbers will get a better indication, which is about 32 on the spread, inverse at 32. August to OC is about 7-8 cents here, inverse is 7-8 cents, and we're going to be watching that to give us an indication to the upside as well. So we're going to be watching for these spreads to tighten up and trade a little bit higher for crude to get up to back up to 99. So levels here, guys, or first let's talk about, yeah, I guess we can go to levels here. Levels this morning on your crude, as you can see in front of you. Now the only thing that stinks here is I'm using a computer. Look at this, guys. I'm a little upset. Look at my other sheet. And it just shows our spreads and stuff, so you can see it sideways, and it's, oh man, but yeah, I don't know what happened, so I'll get that fixed tomorrow. I'm using a different computer. All right, so we're taking a look now, ladies and gentlemen, at your levels, because we covered our multiple market divergence, we covered our volatility, we covered our spreads, our supply-demand differentials, we covered our currency differential with the dollar. So now let's move on over and take a quick look at our levels here. And first I'm going to start with the levels here for your forecast for today's DOE EIA numbers that are going to be due out at 10:30 in about 2 hours and a half. So forecast, we're looking for crude to show a 500,000 barrel build. Again, we're looking for a build of 500,000 barrels. Gasoline, we're looking for 1.2 million barrel build. And distillates, we're looking for a build of 300,000. So we're looking for small builds across the board. And if we get these draws that we got in the API numbers, then that will be very bullish, and we'll be up towards knocking on 100's door. So we'll keep an eye on those levels. We'll keep eye on these levels here of the inventories. And again, revised numbers will be issued out probably close to around 10 o'clock from Platts. So you guys will get the latest in terms of forecasts from Platts. This is what they're giving us right now, this morning on the trading board. And this is what I'm going to give you guys around 10 o'clock. They will revise these numbers. They usually do. Alrighty, guys, levels in crude here. Yesterday's pit session, we had a high up at 98.84, a low down at 97.97, and we ended up closing and settling the day at 98.70. And this is all on your August pit session, high, low, close. All right, guys, daily pivot today is going to be up at 98.50, which we are trading close to at the moment. Again, guys, we have 98.50, your daily pivot today, 50 even on your daily pivot, which we are kind of trading near. Again, we just bounced off it before. We haven't really tested that level at all today, either in the overnight session and obviously not the pit session yet. So we're going to be watching that 98.50 in a big way. That is one of our daily pivots. Alrighty, guys, resistance up above, I have 99.03, 99.37, and 124. Support down below, I have 98.16, 97.63, and 96.76. Alrighty, guys, in the pit, we saw big activity here in the Augie 100, Augie 102 call. We saw some pretty big funds come in and buy them. We had macro funds come in and buy the 100 call. We saw the hedge funds coming in and tease that 102 as well. So we saw about 7,000 of them trade on the roll here. So we have been seeing also roll activity from the outright contract. When I say the outright contract, that means the contract you guys trade. The outright contract, we saw a bunch of roll here from July to August yesterday, as they were trading the spread a lot yesterday, and they were trading a lot of Augies as well, if you remember on the broadcast. So we were able to see some decent activity come into play yesterday off the bell. Coming into the closing bell, we saw a lot of buying activity. So that was funds. That was a lot of the bigger guys here. Sorry, I have to get my Samcast away. So we're going to continue to keep an eye on our fund buying basically and our physical delivery buying towards the end of the month. All right, natural gas, as we spoke about natural gas the other day, man, oh man, oh man, remember we were talking about that large position taken by those hedge funds and macro funds in the natural gas as well? Well, we've been firing up ever since here, and we had just a bit of a pullback off the 390s yesterday, or 395, which, what did I say yesterday? That was a good level. 390 and 395s are good levels of resistance, and we went right to them to a tick. So it was perfect in terms of just where we're going. So natural gas, we could expect just really kind of chop type trade today, trade within the range here. We're going to be using that 395 as some support, resistance, and then we're going to use the 385 as some support. So we're going to be using 385 as support and 395 as resistance today. So it's important to keep an eye on that. High from yesterday, 395.20. Low, 386.5. Daily pivot today, 390.70. Close and settle yesterday, 390.40. So you can see that settlement number and also that daily pivot are going to be very important levels to keep an eye on. Let's see here. Resistance up above. I have 490, 490, 499.40, and 408.10. Keep in mind that 495.20 as well. Support down below here, 386.20, 382 even, and 373.30. Now keep in mind implied volatility has been sitting at around 29%, along with the vol index 29.75, 29.75. I'm still below 30% in volatility. I think maybe once we get a move and we possibly get up to $4, which isn't too far away, it's only 5 cents away, or no, 10 cents away from the settle from yesterday, we could see implied volatility start to rise and trade a little bit higher, get some more price action, some heavier movement here associated with the trade in the market. So we'll be watching that. Again, as we all know, big long funds increased in the COT report with managed money and commercial paper. So we're going to have to really, really, really just kind of go with the flow here, trade within range, trade within your channels, and just kind of have a little bit of a bullish sentiment in natural gas. If I could real quick, I'm not going to show you any charts because I don't have one up at the moment, but I'm looking at that chart from yesterday that I showed you guys and the one that JJ was showing you with the channel. We're basically sitting towards the low end of the channel on crude. So we're going to continue to really watch this little slight channel low, and we want to be buying these dips, buying the lows here. So let's see. They really didn't price in the API number from the overnight, and we're going to have to see if they price in this DOE number beforehand. So watch direction, watch the spreads to give you that direction, and then we're going to be rocking and rolling, ladies and gentlemen, in just a few minutes' time. All right, guys, I'm going to throw it back over now to JJ. Have a wonderful day, ladies and gentlemen. See you all in just about 45 minutes.
Marty, as always, thank you so much for coming out and joining us here, my man. Good to hear from you this morning. Glad you're having a great summer out there and on the NYMEX exchange. Man, and you guys have, listening to your broadcast yesterday, very exciting stuff on the nat gas. Guys, if you haven't checked out Marty and his partner Jeffrey over at Traders Audio for their broadcast in the NYMEX pit, it's a very interesting broadcast. I must admit, I've heard a lot of squawk broadcasts before, and this is definitely the most active, and there's so many dynamics going on in the energy pit. I'll tell you, I can't say enough good things about it. You gotta be listening in. You gotta pay attention. But boy, you can really, really pick up a bunch of useful trading opportunities by combining the charts that I'm going to post on our blog right now, and of course the direction that Marty's giving you as he's seeing it unfold this morning. Going to be a great opportunity. Log in, check out Marty at Traders Audio at 8:50 a.m. this morning. I'm on vacation this morning, or this week, so you can't check me out today at 8 o'clock, but you can come in and see me next week. I open up my trade room Monday through Friday at 8 a.m. Eastern Time, and I'm JJ at School of Trade. I want to thank you all for watching today. Thank you so much for joining us on a wacky Wednesday. We've got Fed Day today, contract rollover, inventories. It's wacky Wednesday today. It's a 4-star day here in the energy markets this morning. So be careful out there. Follow the trading plan. Maximize those profits. Minimize those losses. And remember, guys, we'll see you guys in 23 hours and 30 minutes. We'll see you at 7:30 a.m. Eastern Time tomorrow morning. Have a wonderful morning session. I'm going to be posting all of my charts here shortly. And don't forget, you got to learn it so you can earn it. See you guys next time. Adios, amigos. Bye-bye for now.